Fundstrat's Tom Lee is here today, and so is Requisite Capital's Bryn Talkington. And we're happy to say both are CNBC contributors. Bryn, welcome. Tom, it's good to have you here on set. What do you make of what the professor has to say here?
I think Jeremy's pointing out some important things, but to me, I actually think the Treasury buyback was a wise thing to do. I don't think it's any different than a company saying, hey, look, there's some things that are getting investors nervous about my stock, but it's things that are not related to my company. And I think that's what the Treasury signal was. And so I don't think it's manipulation. It's really an indication of value. And I think just trying to put some signal out from the noise.
What if it doesn't work?
Well, if it doesn't work, they have more dollars to put to work. So I do think, the Treasury Department does have a lot of resources available. So I assume it's going to work.
So you assume that yields are going to start going lower again?
I think that we need to just have some ballast until we get some clearance or signal from what oil is going to do and the direction of CPI and things that are giving the market a little hesitation. And of course, Jackson Hole is this week or this coming week, and I think that could provide some clarity, and all that could quell whatever risk premium is being built into yields.
Bryn, how do you see it?
Well, I think a lot of the narrative this week has been, well, Kevin Warsh is in a little bit of a pickle because he's been saying, well, let's let the bond market tell us what's happening. And then at the same time, as a juxtaposition, Secretary Bessent is buying treasuries. But when you actually peel that back, the 30-year, first of all, the 20 and 30-year are very illiquid. It's about a $6 trillion total market if you look at long-duration bonds. No one signals off the 20 and 30-year. It's really the 10-year, the 5-year, the 2-year, and they're not buying that. So I do think Fed Chairman Warsh actually has the ability to thread the needle to say, first of all, these purchases by the Treasury are tiny relative to the aggregate amount, and it's more of a signal that the Treasury says we'll come in and buy these longer duration yields. Because the reality is the 10-year and that shorter duration is really what everything is set off of. And so I think that the market, though, the stock market will be range bound this week because, as both the professor and Tom said, the meeting at Jackson Hole, which he speaks on Friday, I think that's really going to be the seminal moment where we understand what is he actually thinking, or what's he going to tell us about what he's thinking, since he already says he's going to be a man of few words as Fed chairman.
Tom, do we think that next week is the most consequential for the direction of stocks in the next few months? You're not going to hear from NVIDIA again for a while after next Wednesday. And then I don't think people really think that anything from the Fed's going to happen in September or even October until you get to the midterms. That feels to me like it makes next week even more consequential for stocks.
I'd agree. I think it's what I'd consider a clearing event, because let's take the AI story. There's been concerns about data centers and political opposition, and it's caused the trade to stall. I think Jensen Huang's going to re-inject a lot of confidence that, look, there's still this relentless demand story, and it's going to be taking place regardless. And similarly on the Fed, I do think the uncertainty builds between Warsh's appearances, and so I think this is another chance to course calibrate.
You raise an interesting point. So you think what certainly appears to be growing opposition to data centers is having an impact on that trade in the stock market?
It is, because if data centers can't be built, then the entire bottleneck trade doesn't look as durable. So I think that what we saw in Ohio and in Florida and Texas and Pennsylvania, which is now governors putting potential moratoriums or even voters saying it's a political issue, is causing investors to pause.
What if that doesn't change? I mean, I'm literally looking at one of the most recent polls right in front of me that I happened to see earlier today, and the support is decreasing across all political parties.
Yeah. I think that tells us that the AI industry, especially the labs, have to start messaging that it's not doomsday. I think it's something that this political issue could become a problem. But that's also why the downstream AI stocks are starting to work. The software this week did well. Even the biotechs and then the cryptos, because they're all downstream stocks to the AI story.
How about